Good morning. We will get started in just a second. Can you hear me? Type in the chat box if you can hear me. Good morning. We'll get started in just a second. Can you hear me? Please check. Okay, thank you, Elena. Good morning, Frank. Thank you for coming. Yeah, sorry about that, Marco. Having trouble with the microphones. I think it's a problem with the sound card. So only the laptop microphone is working. I hope it's not too bad. All right, let's get started. Thank you everyone for coming. I know the microphone is not the best quality. We're having some sort of problem with the sound card, but I hope that you guys can still understand me clearly. I don't think it's just you, Marco. I think it's the sound card issue. Wasn't able to get my condenser mic or any other mic besides the laptop mic to work. But we'll get through this. This is our first video, and hopefully we'll improve on it on the next video. Good morning, Stephen Young. All right. My plan is to have this only be an hour long, so let's go ahead and get started. Thank you for coming and attending my first ever live options trading and training, where we will be focusing on the wheel strategy, the amazing wheel strategy. I want to spend 10 minutes doing introductions and talk about sort of the past trades that I've done. Then from 9:10 to 9:30, we're going to look for trades. 9:30, obviously the opening bell. We're going to see what's going on with the market, and I'm going to open up the floor for Q&A, and we'll talk about strategy as well. But before we start, I want to share with you some mindset that I think you should have, something that I hold myself accountable to, and maybe you should as well. Number one, hold yourself accountable for your choices, right? I'm just here to teach you what I do and what I know. That doesn't mean it's going to apply exactly to your circumstances. You and I are different ages, you have different account sizes, you have different risk tolerances, so you need to make sure that you're always accountable for your choices. Now there's a big difference between responsibility and accountable, and I think about it like this. Say you're driving down the road at night, and there's a big semi-truck in the other lane, and suddenly it starts to drift into your lane, and now it's blocking both lanes. Well, what do? Do you just run into it headlong, and then tell the coroner he's responsible? Or do you slam on the brakes, honk the horn, and veer off to the side into the ditch? Well, you got to do what you got to do. It doesn't matter who's responsible, because at the end of the day, you're both going to be accountable. You're going to be dead, and he's going to be in jail, or he's going to get his driver's license taken away at the very least. So that's the difference between responsibility and accountability. We're all accountable for our choices and for the outcomes. Okay? Number two is be realistic with your goals. Make sure that they're attainable, and don't chase the dragon. What I mean by that is you'll see a lot of other channels, a lot of other people talking about huge returns and this and that, and you can do that with a small portion of your account, but be very careful doing that, taking it seriously. And just because you get lucky once doesn't mean you get lucky again, and you end up in this situation where you're trying to get that same high that you got before, and you end up what I call chasing the dragon. You don't want to do that. But you have to set realistic goals, and I mean even on a minimum level. You have to beat inflation. I think inflation is twice what the U.S. Government will tell you that it is. I think it's twice as high. So make sure that you're investing with a purpose. Make sure that you're setting some sort of bar, some sort of minimum. You have to get above inflation. Now, me personally, I wouldn't trade stocks if I wasn't making north of 20%. Because if I'm not making at least 20% in my trading, then I should be doing real estate, where I can get 20%. It's a different type of work, it's more personal, and it's very consistent, but I like trading stocks because I can do it anywhere. But if I'm not going to get 20%, then I need to look and find something else. Number three is be kind to the community. And number four goes along with that is don't be a parasite. Don't just take from the community, come to the community, ask questions, take, and never give anything back. Find some way to give back. Now, about me, that's me in the top right. Sorry, my cam doesn't work. I thought we had to set up differently. But, you don't need to see my face for this anyway, probably saving your eyes. And a little bit about me, I'm a bit introverted. I'm an INTJ, if you know what that is. Okay, I've been a professional gamer. These are my strengths and my weaknesses. And I've started last year with trading the wheel. I tested it in my main account. I liked it so much, I set up a separate account for the wheel only, and I've grown that to 43,000 in about 10 months' time. Okay, so that's what I've done. Why you might be listening to me today, which shows that I've accomplished something, and we can all learn something from that, hopefully. By the way, some of the people in this room today have never traded stocks, and may have never traded options, and they may never have traded the wheel, and some of you are already experts at the wheel. But hopefully, somebody's going to learn a little bit about everything, okay? If you're new, this stuff can be very confusing. Just stick with it, absorb as much as you can, and ask questions, okay? So let's jump into some terms real quick. 5 minutes have gone by so far. We're still on track. You can read most of these terms. Bullish and bull strategy, I'll be using that a lot. Bearish, bull strategy, bearish and bear strategy, long, short, and what the wheel is. The wheel is a bull strategy, means, thank you, Frank. The wheel is a bull strategy, means it does best when the market is going up, when GDP is going up, when stocks are going up, this is a good strategy. But if it turns into a bear market, it has a bit of downside protection, but it's not really generating profit. So I would not use this actively in an extended bear scenario, okay? In the wheel strategy, we want to write cash secured puts. You can also call them cash covered puts. Same thing. Cash secured, cash covered put. And when I say write, we're shorting it. I don't always like to use the word short for new people. I think writing it makes more sense. We are writing the contract that somebody else is buying. And it's a simple click, and I'll show you the Tasty Trade later if you're new. It's not that hard. It's just a few clicks of a button. But you are creating the contract that somebody else is buying it. It's not like shorting stock. If you short stock, you have to borrow it from the broker, then you sell it. Okay? And that gets a lot of people confused, and so I'm going over it a little bit, because when I try to explain it to my friends that we're shorting a contract, they get lost and confused. Because how do you sell something that you didn't buy first? Well, we're creating the contract. We're writing the contract. And we do this to earn premium. Then the second part of the wheel is if the stock ever gets assigned to us. So if the stock value goes down below its strike price, then we get assigned the stock. So now we own the stock. And we turn around, in most cases, and we sell a covered call. Okay, so we're shorting a covered call, we're writing a covered call, and we're earning premium until the stock gets taken away from us. And let me know if I'm going too fast. I think I'm going to blow out my voice in the next hour, but I want to get through this section quickly because most of you came here to find out how to go find these trades, not learn what they are. But a couple more things I want to talk about. Up here is the break-even percentage, or what I've been calling before CBD, the cost basis distance. I thought I created that term. Turns out barchart.com beat me to it, and I just discovered that recently. I had not seen that in any books. I don't see most people talking about it, but it's a huge part of my strategy called the break-even percentage. The other thing is probability of profit. Some people use delta. Delta is just an inverse approximation of probability of profit. So you can use either one. If you hear people talking about it, they're pretty much the same. Okay. By the way, we have a bit of a giveaway. If you stay till 10 p.m., Miss Elena will be giving out invites to our Discord channel, and we can give you a copy of the slides if you would like. Okay? Somebody asked, what's my strategy, what's my deltas, etc., etc. And they thought that I wasn't going to tell anybody, but I was just saving it for the web series or for the web video, the YouTube video. Okay? I'm looking for trades that have an APR, that means annual percentage rate. You can also see it called ARR or AAR. They're very similar calculations. You can use them interchangeably almost. In our cases, the slight differences don't matter. But I'm looking for trades that generate 25 to 60% APR. Now again, this is based on me, right? I'm 38 years old. I still have working years in my life. If necessary, I could go back to work. I don't have to live on my trading income, okay? If you're in a different category, if you're retired or retiring, this might be too aggressive for you, and there's nothing wrong with that, okay? But I'm personally looking for at least 25% APR, because if I'm not going to get that, then I might as well go back to real estate investing. Does that make sense? Let me know in the chat group if that's still making sense here, okay? These are for my criteria. But I'm sharing them with you so you know how I got to where I am, how I was able to grow my account 70% in the last year. And very important to the wheel strategy. The really key thing that I love about the wheel strategy and why I think it has better layers of safety than the other strategies is because we end up owning the shares. If we make a mistake, we end up owning the shares. If you do a bunch of spreads and iron condors and spread eagles and spread butterfly spreads and all these other stuff, most of the time you're getting settled in cash. So when you're wrong, you just lose cash, and that's fine. The nice thing about those strategies is that they sometimes use less capital, and so you're getting a better return in some cases. But I like the layer of protection that I get from just owning the shares. But there's a very key and important detail here. Don't trade bad companies. if you're only trading off of technicals and you're using the wheel strategy, you're not doing fundamental analysis, you're giving up, you're throwing away that very important layer of security and safety, which is you get to own shares of a good company. Well, if you only didn't do any fundamental analysis, you're trading a bad company because of a high return, you gave up that layer of safety. So this is actually what you can put into a scanner. And you can do a scanning on Thinkorswim. You can use a scanner. Yeah, thanks, Wayne. You can use a scanner on bar chart. I actually have my own scanner, which I had made. I'll show you guys that today when we start looking for stuff, and I need to speed this up because we're 1 minute over. But these are the inputs that you can put, into the scanners. You can put in some of them, not all of them, you can put the APR, you can put the POP or the delta. You can put the, obviously DTE is days to expiration for those of you new. I just keep saying DTE now, I even forget what it stands for, days to expiration, okay? I typically do 30, 45, and 60 days out. I don't do weeklies. I consider the risk is actually higher and you're getting a lower ROI, which causes a problem because in my strategy, I like a nice high break-even percentage. If I do 7 days out, the ROI becomes so small that sometimes I can't get this 15, often 20% break-even percentage that I'm going for. Over the last year, I've aimed for a break-even percentage of 20%. Okay, thanks, Rigo. Right now, I want to diversify my portfolio a bit, so I'm going to actually lower my target on my APR down to 4%, and I'm going to lower my break-even down to 15% because I want to start expanding into some different sectors. Over the last year, I've been mostly tech. I've done a little bit of CCL, which is Carnival Cruise Lines, when they had a better balance sheet. I don't do them anymore because of their balance sheet, because of their debt, liability to asset ratio. Okay, I've done some cryptocurrency mining stocks. These are actual stocks of companies that mine cryptocurrency and Bitcoin. I've stopped doing this simply because I have so much exposure to one cryptocurrency company that I think is going to 4x in the next year. We're not going to talk about that today. We can talk about it in the Discord chat on another time if you join the Discord chat, okay? But that's the only reason I'm not doing it. Now, we'll show you some of the cryptocurrency ones that you could do. And the only reason I'm not doing them today is because I already own so much, it would just cause too much exposure between my portfolios. The other thing, the next thing I'm looking into are cannabis stocks. Cannabis, I know some of you don't like it, that's fine. I don't have any problems with it, I don't use it, but it's a business to me, okay? Cannabis was worth about $19 billion in 2019, and it's going to be worth about $65 billion. I think this is just the US, I'm not sure if it's worldwide, but $65 billion in about 2025, 2026. That's huge, 300, 400% growth rate in the course of 6 years. So you're looking at over 50% annual growth rate. So I'm happy to start looking into some cannabis as a sector. Let's move along. I'm spending too much time here. Before you start doing the trading, you should create some sort of general market view. You should analyze the GDPs of the US, UK, and China to determine whether or not we're really headed for the next bull market for the next 6 to 12 months. Then you should look at your sector, and then finally you should look at your company. I wish we could spend more time here, but we got to keep moving. All right. Now let's go sell to open. Let's go start finding some stocks. I'm going to use my scanner today, but you could use other scanners. Mine is still in beta, so it's not available for the public to use it. We'll talk about maybe some other influencers or some other people testing it first. But right here you can see I'm entering in my days to expiration. I'm doing 20 to 37 because sometimes you don't land right at 30 days, right? So we're going to go plus or minus 7 or 10 to make sure we get far enough out. I'm doing underlying price. That's the stock. That's the value of the stock under 100 because I don't want too much of it taking up my portfolio. That is one downside to using the wheel strategy. It would be great to use it on Tesla all the time, But one short put on Tesla is going to cost you $65,000, probably $70,000 today with Tesla shooting up. I'm very happy about the price of Tesla going up because I own a lot, but it is very hard to wheel that for most people. Okay, let's take a look at this. Yep, everything looks good. I'm going to hit submit, and let's see what comes out. It takes a little minute here. It gives me a chance to rest my breath as well. Have you learned anything so far? Let me know in the chat group. Let me know everyone's still listening. It's so weird to be in a room talking to myself. I'm a bit nervous. This is my first time doing it, but I'm excited, and I thank you guys for being here. All right. One thing I like about my scanner is I can put in notes here, and I can very quickly start. If I don't remember what the ticker stands for, I can just highlight it and learn a little bit about it. So this is a cannabis-related stock. They don't actually sell cannabis, but they sell the equipment to grow cannabis. So I'm going to mark that so that we take a look at that soon. I like space for a very specific reason, several reasons. Number one, space is in tech growth. It is a growth sector, whether you like it or not, whether you believe it or not. Secondly, they employ a lot of engineers. Any company that employs a lot of engineers is going to create spin-off products. It's just a natural phenomenon when you're solving really big problems that they're going to have different patents and different products that can be applied elsewhere. Mara and Riot are the two Bitcoin technology stocks that I was talking about before, okay? I might do these trades if I didn't have so much tied up in one other company that I no longer feel comfortable taking on more Bitcoin stocks, okay? Until that plays out. Until that stock goes 3x, 4x like I'm hoping it will, then I can go back and sell puts on these. Because if you look at the ROI here, let's take a look at this one. Mara, I think Mara's kind of the better of the two. I like that Riot has some other services. They do accounting and auditing and all other types of stuff, okay? Mara is more towards just pure Bitcoin mining, and they're going to have the most hash power at the end of this year, as long as they get their deliveries. Yep. All right, so Mara is currently trading. That means today's price before the pre-market. I don't know if the pre-market changed it. This is not a live scanner, by the way, okay? Mara was trading at 48.85. If we sold the April 30th $40 put, we would collect $3.20 in premium. That's just 25 days to make 8%. And I'll show you through a calculator. If you're ever looking this up, okay, you want to know what type of ROI you're getting, you take the bid, which is $3.20, and you divide it by the strike price. 0.08 equals 8%. Wayne, great question. This is not a platform. This is just a scanner that I have built on my website. Okay. You can do the similar scan in Thinkorswim. I didn't have that set up for you today. Next time we'll try and have that set up for you. You can also do a similar scan in barchart.com, but I think you need a membership to use some of their features. And they charge about $30 a month. Okay. Not affiliated with them. The other thing that I like about Mara here, where is it? CB distance. This is, again, the same thing as break-even distance. If you were to make this trade and it actually got assigned to you, you would be getting the stock at 24.5% cheaper than today's trading price. That is a huge advantage for using the wheel, because if it gets assigned to you, like, let's just compare apples to apples, okay? Today I could buy the shares, or today I could sell the put. If I sell the put, I get $3.20, and I don't have to buy it until it goes below $40. If I bought it today, I'd buy it for $48.85 and I'd own it. So where would I rather be if the stock drops? Well, I'd rather sell the put, because my cost basis is going to be 24.5% less than if I just bought it today. That's the first big layer of safety that you're getting with the wheel strategy versus buying shares. This is what got me excited about this. This is why I started testing it. This is why I love this strategy. And I don't see enough people talking about the break-even percentage, aka the cost basis distance. This is a huge part of my strategy, and I hope that you learned something today. I hope you took this away. Even if you've been trading the wheel forever, this is a big thing that I like to search for and use. Okay, let's keep going. It's 9:21. I want to find a stock, that I can actually trade today, although that might not happen. I'm sorry if it's a boring YouTube video because I don't trade stock every single day. By the way, I didn't mention this. My goal is only to have 6, 7, 8 positions a month. I'm not one of these day traders who needs a position every single day. Okay? The website we're using now is Wallmine. You can use Yahoo. Okay? Yahoo is more accurate when you're looking up the information. Wallmine, they're sometimes a little slow on updating earnings and things like that. The thing I love about Wallmine is it has all the information on one page. It's really easy to find it. So I usually start with Wallmine, and then I just verify it in Yahoo if I'm actually interested in the stock. So the first thing we do is we find a stock that we're interested in. This is a cannabis-related stock. It's not cannabis. Okay, they sell hydroponic equipment, and they've been buying up their competitors. Okay, I know a little bit about the stock before we started. Sorry we didn't find one completely brand new to me today. Tilray is another one that's cannabis. That one's actually cannabis. I have not looked at Tilray. Let's look at this one instead of looking at GRWG. I want to look at one that's fresh with you guys. Okay? That is a huge spike in February. That is a huge spike. So let's take a look at this. First off, they're a $4 billion market cap company. Before I make a trade on this, I'd want to go and see comparable companies and see what size they are. If this is accurate, and Wallmine is not always the most accurate here, Tilray is much larger than Omeris Corporation. But Omeris Corporation there is a biotechnology. See, this Wallmine thing is not super accurate for comparable companies. So I would want to go and find other cannabis-related stocks to see how big Tilray is compared to them. So how do we do that? Let's see if we can do that today. See, I'm doing this live, folks. I'm not just, this isn't all pre-planned. I don't know if we're going to be able to find everything. Okay. This is a website I like to use for my idea generation step, which is where we're going out and finding new stocks. It's called ETF Database, etfdb.com. When I have a thematic play, such as cannabis or tech or EV, I like to go to this database and find, I didn't want to go there, and find ETFs that match my theme so that I can see similar stocks and make my comparisons. Let's do this again. Okay, we can see here 1, 2, 3, 4, 5 different cannabis ETFs. By the way, I'm curious where you guys are in the world. You can tell me in the chat room if you want to. You don't have to. I'm actually in Bali. I am a U.S. citizen, but I live in Bali. So I get to research stocks all day, and then the market opens at about 9:30 p.m. for me. And this works great for me because the wheel strategy, because I don't have to sit there and look at everything all day. I don't have to look at live trading and live price charts and stuff like that. So here we're going to the cannabis ETF. I can do my research basically all day, go to the beach at sunset, trade for an hour, and then go to sleep, and let you guys worry about where the market's going. Prague, Philadelphia, nice, cool guys. All right, so after we click on this ETF, if we come down and click holdings on the left, okay, you can see other cannabis companies. Texas, yeah. All right. And this will tell you, look, this company, this ETF likes Tilray. It's in their top 3 holdings. Top 3 holdings of this ETF, Tilray. Let's jump into the next one. Okay, I'm not seeing Tilray here. Okay, Cambria Cannabis does not like Tilray, or at least it's not part of their top 15. They could have. I don't have a full account on this website anymore. I used to. I did it for a couple months and then I dropped it. Okay, but Tilray is not showing up in their top 15. It might be in their top 50. So they have 29. It might be in their 29, but it's not in their top 15. Next is CNBS, Seymour Cannabis. Let's go to holdings. Again, no Tilray here. That doesn't mean it's anything bad. It's just something interesting to note. No Tilray. Okay. Again, we see Tilray again, but we see it's much lower on this company's holdings. So it's probably outside of the top 15 of these other companies. Ah, Dallas, nice. You getting a Cybertruck, Bill? I want a Cybertruck. Tilray, no Tilray in the top 15 of this ETF either. So we looked at five different ETFs. Oh, thank you, Frank. I did not know that. Frank says Tilray and AFA, I don't know how you're going to pronounce that ticker, are merging soon. That is an important thing to know, and that could be a huge catalyst, especially if it's soon. It could be driving up the stock price to an unreasonable rate, and we might not want to trade the wheel because we don't want a catalyst to drive the price up too high and then come crashing down on us, or vice versa, just come crashing down after we bought it. We don't want that to happen. We want to find volatile companies that have good long-term growth in case we ever own the shares, but are not going to have a huge drop. Because while we have a FRIA, thank you, while we have some cost-based distance protection, we don't want to get stuck out holding a stock for too long at a low of a price. Okay, so I like this Tilray is in a few different companies. Yep, okay. Thank you, Frank. Frank was absolutely right. So, according to Yahoo, Monday 5th. See, this is what I love about Walmart. Everything is very convenient, but they're not, you can't trust Walmart for everything, okay? I find a lot of news on Google News, not Walmart. You have to look for multiple sources. Afria has a proposed merger with Tilray. Blah, 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 blah. I'm not going to read all this. You can read through this if you want to, okay? I'm not going to do a ton of fundamental analysis. That's going to create a boring channel for you guys to sit through, which is why you don't see so many YouTube channels talking about it. They'd rather just do like a 5-minute segment where they show you the stock chart, they take some lines on it and they say buy, and they draw some lines on it and say sell. Look, I make fun of it, but technical analysis is like the last step of my process. It's not a useless step, but it's the last step of my process. I don't consider it as a leading indicator or one of the first things that I'm going to look at and do. So here we can see there is a cross pattern on the SMA 20 over 50. Thanks, Wayne. I think maybe we'll have to start sooner next time or something because time goes so fast in explaining all this stuff to you guys. I don't plan on opening any positions today, but let's keep looking at this Tilray a little bit. Okay, market cap, good. Revenue, quarter over quarter. It is a growth company. It's going up 20% quarter over quarter, 26% year over year. You can confirm that on Yahoo. Institutional ownership is 16%. That's actually not bad considering that it's a cannabis stock. It will not pass a lot of ESG or EGS, I forget. It will not pass some of their requirements. Some of them won't touch it because it's cannabis. Okay? If you're really going to do a deep dive on this, you should definitely read the 8Ks and 10Ks, the annual and quarterly reports from the SEC. Another big thing that I like to look at is insider sales. When and how much and who. I'd hate it when I see a CFO recently sell their stock and sell a lot of it. If the CFO and the CEO are selling, I don't want to be buying and I don't want to be shorting the puts on it. Okay, you guys should always be looking for that. I don't really care about their compensations. Okay, here, I do like to see this. We can see a curve in their debt to assets. And their debt to assets, ooh, debt to assets, no, it's good. It's going down to 60%. That's actually high though. Let's take a look at this. 557 to 945. Yeah. Okay, let's take 572. I might be doing this backwards because I'm talking to you guys now. 60.5% leveraged. Okay, I don't like that. I don't like that. I'm very happy. It's extremely great when it's under 25%, although it might be under leveraged. Depends on the sector. I'm okay with it up to 50%. I'm kind of okay at 60%, but I hate it over 70%, and they're getting close. So I don't like that about this company. I want a company that if I buy into it, yeah, Walmart is free. They're clearly going to go premium later, but for right now they're free, and they might have some premium services. You don't need it though. Okay. All right. Back to that's the asset liabilities. They're approaching 70%, and you look down here, they're still quote unquote growth phase. They're spending more than they're earning. So I don't want them to have this much debt when they're not profitable. It's not good. It's not healthy. It puts me in a dangerous situation where if I end up owning the shares, say the sell price, say I sell the put, and the price drops 30% tomorrow, I want to make sure I have enough months for this company to recover and for me to sell covered calls, for me to get out of it. So unfortunately, today, I'm going to stop looking at Tilray because it doesn't meet my criteria for the wheel. And you could do a different play on this. If you think this merger is going to go huge between Afria and Tilray, then you can just buy calls or buy the stock or do some other type of credit spread or debit spread on it. But for the wheel, I don't like what I'm seeing so far. And here's the thing. This is the hardest part about the wheel. It's finding the good stocks to trade. It's not like you go and find any stock that you want and then you just decide to play the wheel on it, right? You go out and you find good stocks that can last a long time, you play the wheel on it, and you collect premium month after month after month, okay? So the wheel is like a tool in your tool bag, and you have to fit it to the right stocks. You don't just throw the wheel around willy-nilly. So I'm going to close out Tilray and Afria, whatever that's called. Somebody else had a suggestion, and it's already 9:33, so I'm going to look at that suggestion I saw. Somebody said something. Thoughts on Sundial? Let's take a look at it. Okay. Next step I'm going to show you is the option. Whoa. Come on, Finance Yahoo. Is that the right ticker symbol? Sundial? Or did we forget the U and we were typing the company name? There we go. Just give me the ticker symbols and the company name. Sundial Growers. Interesting. Okay. What I want to show you next is, let's say you don't have your platform open or you don't know how to look for it. You can come in here and you can check the options on finance.yahoo.com. So even if you're on your phone and you don't want to log in, you can do this. But make sure you come over here. You have to change the date. Today's the 5th, so we want to look at May 7th, greater than 30 days. I like to switch to straddle. Straddle's just left and right. And here's what you do. When you start looking at a stock, there's going to be tons of strikes that you can look at. There's going to be tons and tons of them. They could be 50 cents apart, $1 apart, $2.50 apart, which is why I don't like when someone tells me they trade 5 strikes away from the money. 5 strikes doesn't mean anything to me because is that $12.50 away or is it $2.50 away? Okay? But the first thing we want to do when we're considering the will is just figure out what is the the ROI at the money. Because if it's not, excuse me while I type here. See, this one's, oh man, this is, okay. It's showing me, yeah, this is an interesting stock, I'll just say that. Okay, we actually got to look at the dollar strike because it's so far below, and obviously that's 10%, okay? You would get 10% at the money, you get 5 cents. It's so small of a stock. I pretty much wouldn't trade this just because of how small it is. 5. you're still getting 10% at 50 cents. Hey, look, I don't like these small stocks under like close to $1. They're just really swingy. Anybody could short squeeze it or tank it for any reason at any time. If they go under $1 too long, they get delisted. I don't like trading stocks this small. Okay, but that being said, if for some reason you really like this company, if you really like this company, just buy it. Okay, but if for some reason you really wanted to run the wheel on this, you could sell the 50-cent strike for 5 cents. It's a 10% return. You might end up owning it at a good price. I'll leave it to you. I personally would not, I have to know more about this company, but right now, I probably would skip this and not add it to my account. All right. Hey, I like this. I like going through your guys' stuff. This is a little bit more fun and interactive. Digital turbine. What is digital turbine? Let's come to the profile. You go to the profile on finance.yahoo.com to find out what it is. On Wallmine, it's on the front page. So they have something to do with mobile and OEMs to monetize their devices. This is really jargonish. I didn't really understand what this company does. Under here in profile, you can click on the website and go and look at what they actually do. Makes it easier than ever before for people to discover new apps and content for operators and OEMs, original equipment manufacturers, to boost their revenue, and for advertisers to reach users at scale. And then I have to go and find out how. How did they do it? Why is it different than, how is it better than the Google Play Store? You know, because that's kind of what they're saying. It's like, you want your app to get discovered, they're going to help you, and how? I want to know how. Simplifies content delivery. Okay, how? Blah, 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 blah. Okay. I'll look at team in a second. So, in the interest of time, I'm not going to spend too much more time looking into this because I'm guessing. I'm just going to take a guess at what this company does. Some of these companies, they add a software, an app to your phone that they put it on the OEMs, and then people can find other apps through that button. So it's kind of like a Google Play Store, but companies put it on their own phones to try and get people to get the apps from them instead of the Play Store. Yeah, maybe that's interesting. Maybe you think it has some sort of big idea. Oh, excuse me. I'm not that interested in it yet. Maybe I'll take a look at this later when I know more about it. In the interest of time, we're already at 9:40. Holy smokes, this goes fast. Cool. Team. Let's take a look at team. No, I clicked the wrong one. Team Atlassian Corporation, PLC. Again, what does this company do? By the way, if you have a specific strike that you're interested in, give me the whole chain. Tell me what the price is, what the strike is, and what the bid or premium is. There's specific design, development, licenses, blah, blah, blah. Software products worldwide. So they're a software company. It provides project tracking, content creation, sharing, service management. Oh, Jira. This is the guys that make Jira. I should have known this Atlassian was Jira. Jira is a big, by the way, I work in game design, so I know Jira a lot. Jira is a issue reporting software service that a lot of developers use. They use it for bug tracking. They use it for complaints and suggestions, etc., etc. This is an interesting company. Let's take a look at these options. Hey, thank you, Stephen Young. This is an interesting company because I know this one a lot. They might be running into some problems though, because a lot of small people, a lot of small developers are just using Trello, and Trello is not better than Jira, but free is sometimes very valuable. All right, let's look at what this is in terms of percentage. My brain, I'm actually pretty good with math when I'm not speaking. 22.50. What is the price? 22. Okay, I gotta go. Whoa, we don't have. Why is there no bid at the 220? That's just weird. Okay, I want to go look at the 215 then. 21.59 divided by 215. It's about a 10. No, calculator's messing up. That's about a 10% return. let's do this properly. 21.59 divided by 215. That is 10% at the money. Okay, the reason we're checking at the money, we're not going to sell at the money. I want to be very, very clear. I'm not going to sell at the money unless I really want the stock. Sometimes you can use this strategy just to get stocks that you want. Or if the implied volatility is so freaking high that it just makes sense sometimes. But very, very rarely do we want to sell at the money. But here's the thing. Why do I check at the money? If you're not getting 8, 9, 10% at the money, then it's not possible to get 5% out of the money, right? If you're getting 4% at the money, then of course you're not going to get 5% at the money. So let's go take a look at some stuff now. Whoa, there's a big, okay, we got to look at something else, because look at this spread here. This is a huge difference between the 215, the 212, and there's nothing at the 220. All right, stock ticker is team. So let's come into Tastyworks. I use Tastyworks. We do have a referral program for them. They don't give much. If you want to use it, it's great. If not, it's okay. All right, so Stephen Young, here's a problem. If we're going to sell this 30 days out, we're going to end up in May 7th. Earnings is on April 29th. Okay, so implied volatility is only 45%, yet somehow we were still showing 10% at the money. Let me take a look at this. Okay, that 10% is gone. The price has moved, or there was a problem in the price. So May 7th, 32 days out. Today's price now is $2.19. So let's look at the $2.17. You're getting $10 on $2.17. $10 divided by $2.17. You're only getting 4.5% at the money. No, I'm sorry, we can't do the stock. Okay, and let me explain why for all the new people. You can't do the stock because you're only getting 5% at the money. There's problem number one. You could do it, right? If you don't want 5%, you're looking for 2% out of the money, then you could do the stock, but I'm not going to. It doesn't meet my criteria. Second problem, the IV is too low. Obviously, that correlates to the price, okay? Other big problem, earnings are April 29th. Earnings are April 29th. So to get any time value out of this, you got to go through earnings. It's too much risk. This stock could drop or shoot up 10, 20, 30% based on earnings, and you're not going to get the upside of that. You'd only really be getting the downside of that. It's not worth it. Let's take a look at QS. We'll do this in Tastyworks now. By the way, if you're new and this is flying over your head now, please ask some newbie questions. Ask me, how does the wheel work? Or ask me some basic questions, because I don't want this just to be stock picking. I want to make sure that we're helping everybody. And I knew that we flew through that. It just happened so fast. It feels like it goes fast for me because I'm doing all the talking. Okay, QS, QuantumScape. And it's ringing a bell, but I got to look it up again. Here I can already tell you it's about 11% at the money. Where'd my calculator go? I just want to show you this because you sit here and you do this. I'm just trying to make it mechanical for you guys so that you learn, right? Boom, 11% at the money, 550 on the 50, okay? So if you start looking down, you might be able to find a good strike price. And I'll show you some more things about the wheel. 42. So there's your 5% right there. Now, what is the wheel? Thank you, Bill Martin. Thank you. I don't know if you missed the beginning of it or if I just went through it so fast. The wheel is a two-part strategy, and I should have made a slide for that. When next time we'll do this, I'll make sure I have a slide for the wheel. You sell a cash-secured put to earn premium. Your broker will set aside the cash in order for you to buy the stock if the stock goes down to the strike price. Okay? Excuse me. And why we call it the wheel is if it ever gets assigned to you, so you end up owning the shares, we turn around and sell a covered call, earning more premium until it gets taken away. I want to give an example after this. Let me finish up QuantumScape, and then I'm going to give an example. I'm going to give an example of some things that can go right, some things that can go wrong using this strategy, using some stocks I've traded in the past. I want to finish this up real quick. You're going to see here, this has a massive spread. The bid is is 225, the ask is 370, that's $1.50. It's almost a 50% spread on the asking price. It's crazy spread. But when we're calculating this, I like to go straight at the bid because you're mostly looking to get filled. What was I looking for here? I was looking for pop. You can kind of check it with delta. Thank you, Angel. That's sort of what we're talking about. Did you join late, or did we? Did I go through it so fast that I lost you? Anyway, back to this QS. If you were to sell the 4150 at the 225, your chance and your probability of profit would be 73%. So the odds that you would not even get assigned on this stock and you would keep your $225 in premium would be 72% chance. If you think about the inverse of that, that's a 28% chance that you would own the shares of the stock at a discount. You have to calculate what that discount would be, which is the strike minus the premium. So it would be $41.50 minus the $2. You'd have a basically $39.50 be your cost basis. Okay? Angel Davis, I'm going to go back to the slides for you. Go back to my criteria. My criteria is I'm looking for 25 to 60% APR, excuse me. I'm looking for a probability of profit over 70, which means a delta below 30, a delta below 0.3. I'm looking for stocks that are strikes, options that are 30, 45, or 60 days to expiration. I'm looking for a break-even percentage of greater than 15%. Not many, I don't know if Thinkorswim will give you this calculation if you can search for this. You can search for this on bar chart, you can search for this on my option scanner, which is not public yet. I'm also looking for good growth sectors. I want something that's going to stay alive for a year and continue to grow. Because the reason why is because if I end up owning that stock, I want it to, obviously to go up in value. I want to be able to sell covered calls out of the money and keep earning premium on it until it gets taken away. I want to get some of that appreciation. I'm going to use the last 10 minutes here to talk about the past. This went way faster. This was fun, though. Did you guys like this? I'm having fun. I hope you guys are having fun. This was a lot more fun than I thought it would be. I just used the fun like 5 times in a row. Let's talk about some companies in the past. Let's talk about one that went wrong. I don't want to be one of these guys that just tells you all the good news, all the good news, all the good news, and fills you full of crap. Okay, I don't want to be one of those guys. Helion is, I think they make actually helium trucks. I think it is basically in the EV green energy space for automobiles. Here's the problem with Helion and where I'm sort of stuck. Okay, my trading price is okay, this is the trading price. This is what I got assigned at. No, it might be the actual cost. Anyway, I have to look through this again. But let's just give some examples. Helion was trading at about 30 to 35 at the time when I was selling the puts. This is a long time ago, okay? Come on. Tastyworks sometimes doesn't show the charts correctly until you click through it a couple times. So you can see here, there was a period of time where Helion was between $30 and $40 a share, okay? And I was selling Helion puts. And I ended up owning it at $26.25 average cost per share. Here's the problem. It's now trading at $11.34. I'm not perfect. You don't have to be perfect to make this strategy work. You just don't go all in on anything, okay? I got snagged on Helion. Why? Because now it's so far out of my cost basis. It's so far down that I can't really sell covered calls with certainty that I'm going to break even. Right? Give a different example. Space is a good example of something that went right. Okay? This trade price is not fully accurate because I've sold covered short puts on space so many times, and it's not reflected in the trade price. I was selling space puts when it was $18, $19, $20, $21 a share. Okay? I have a lot of premium built up in these space shares. If I wanted to sell the covered call, I can pretty much sell it at any price today, 30, 31, 32, 33, 34, 35. I would not only get the premium from that covered call and all those covered shorts that I did, but I'd get this massive appreciation because my real cost basis is somewhere down in the low 20s, okay? That's what's beautiful about the wheel strategy, is it gives you multiple escape routes. I'll give you another example. It's not up here. But the problem with Helium, going back to Helium, the problem is that the price is now so low that if I try and sell covered calls anywhere near my trading price, there's not enough juice, right? I got lucky last month. Last month I could sell a $25 call for 26 cents. That translates to $26 per contract to start making back some of those losses, okay? But now I can't do it this month. If I tried to do it another month out, this is why I like this one. I can actually get 20 cents. Let's go ahead and do this. I don't think this is going to fill. I think this has probably got a big spread on it. But if I can get that to fill, that would be great. There you go. You just saw me make a trade today, if it goes through. But the problem is I'm typically so far out of the money now that it's really hard to sell covered calls on this Helium thing and get my money back. What I should have done is I should have reevaluated. This is the lesson learned. This is important. What I should have done is I should have reevaluated the fundamental business of Helium. Back when I started getting more and more involved in the Tesla and I saw this thing drop, I should have just sold the shares before it got so low, before it got down to 11.35, and just cut my losses and move on. But, because you see here, it's the death by 1,000 cuts. This thing just keeps dropping. If I had sold it back here, I'd be okay in December. But, too late now. Got to keep moving. I was going to do one more example for you guys. Oh, this one went really great. This one got assigned to me, and it turned out to be fantastic. So this company is called CleanSpark. They used to make, they probably still do, they make basically connectors for different OEMs. So it's OEM agnostic, that it connects different green energy sources together and green and non-energy sources. And a lot of times those things don't fit together. So they make an adapter that makes it fit together, and then they have software to calculate all sorts of different things. So they're in the energy sector. They've now moved into Bitcoin mining. But let me show you something if I can get it on the chart. Yeah. I don't know where I was in this. Okay. I was selling the covered short puts on this for about 2 or 3 months, and then the thing dropped in value on me. It's probably in here then. It probably was in September. I was selling the puts, and then for no reason at all that I could find, it dropped. What is this, 30%? Right? Have a high of 13, came down to 8 at the lowest, $9. This thing dropped 30% on me with no bad news. They didn't lose any contracts, nothing blew up, CEO was fine. I mean, literally, I was scouring the news to figure out why the stock in this company that I thought was so great had suddenly dropped 30%, and now I own the shares after I sold the CSP. Excuse me, tripping over my words here, right? I was running the wheel on this, and I got a sign. I don't mind getting a sign, but when something drops 30% for no apparent reason, I'm thinking to myself, what did I do wrong? What did I miss? I'm not mad at the stock market. I'm mad at myself because I'm thinking I must have missed something wrong. I must have not known something about this company. I must have overvaluated something. I literally couldn't find anything wrong with this company. But here's the good news, boys and girls. Thank you guys for watching today. And we're getting close to 10 o'clock, so you can get your free Discord invite in 5 minutes. But here's the good news, right? I was selling the premiums here at 12 and 13, and I was collecting premiums for a couple months. Then I got a sign. The stock came down to $9 roughly. It came even lower. I stopped looking at it at about $9. My cost basis was somewhere between $9 and $10 a share. And I just held the stock. And guess what? I wasn't even watching it. And then it shot way up to 39. Now, I wish I could say I sold it at 39, but I'm pretty sure I sold it somewhere down here in the 27. But still, I was selling puts on a $12 stock that dropped 30%. I thought I made a huge mistake. I couldn't find the news. That's what was upsetting me, is I couldn't even figure out why it dropped. I want to make sure that I'm working on my process all the time. And then I got lucky, and this doesn't happen all the time, but it can happen with the wheel. And especially when you get involved with good companies, good sectors, good growth sectors, it can. My $9 stock turned into a $27 stock, and instead of making 5% a month, I made 300% in 2 months. That can happen with the wheel. So you have multiple layers of protection. You're lowering your cost basis. You're lowering your break-even percentage. You're getting that huge comfort zone. And then when it goes down, if it is a good company, like I said, we don't trade bad companies. We're looking for good companies. You can sometimes get an even bigger return. You can get a 30% return or a 300% return in a month instead of 5% return. That's what I love about the wheel. We've got 4 more minutes to go. Any more questions? Any more questions from you guys? Not just stocks that we'll look at. We'll look at stocks another time. Maybe we'll do another show. I want to know if they've got any more questions. I feel like we didn't spend enough time explaining the wheel, but you basically sell covered puts because you can either get premium or you'll get assigned shares at a discount compared to today's trading price. If you get assigned the shares, then you turn around and you use those shares as the cover to sell covered calls. Because if you want to sell a covered call, you have to own the shares. So instead of running out and buying the shares at today's price, you sell a covered put so that you get 10, 20% discount if it ever gets assigned to you. And then you turn around and sell the covered calls. So if it goes back up, you get the premium and the appreciation. Let's look at something here. I just want to show you guys an example. What if I wanted to sell a covered call on my space? How do you calculate the annual year to strike? Sure. What you do first is you figure out the ROI, and then you take the number of days. Yep. Buy strong stocks, sell weak stocks. Why sell the weak stocks? Sell the puts on strong stocks, and don't even touch the weak stocks. Bill Martin, I think you're right. I think I need to give just a YouTube lesson on the wheel itself. I do have some other videos. That are pre-recorded that talk about the wheel strategy. If you subscribe to my channel and then click on the channel or click on my videos, it'll show up. Somebody asked how to calculate the annual. Well, first you have to figure out the monthly or the ROI, right? So in this case, I think we said it was 5% in, let's say, 25 days. Then take 365 divided by 25, you get 14.6, and then you times that by 5, because it was 5%. You end up with 73%. So if you make 5% in 25 days, you should get an annualized return of 73% APR. If that's wrong, just go look it up. I'm pretty sure that's right. I am talking while doing math. It's like driving while drunk. It's a little bit dangerous. You sometimes say the wrong things, but that's how you calculate it. Thank you, Bill. I hope those videos help. Stephen Young asked, what if we have just 3,000? Can we use the wheel strategy? Yes, you can, but you have to be selective, and it's harder. People ask this question all the time. What is the recommended amount? Okay. Again, I'm not your financial advisor, but for me personally, I would like to have 5,000 and ideally 25,000. At 25,000, you open up a lot of shares, a lot of different positions, and at 25,000, you also get around any day trader restrictions. So 25,000 is sort of a beautiful mark, a beautiful number to get to. I could do this strategy with 5,000. I could probably do it with less than 5,000, but then it becomes more challenging. You just have to be picky because what happens under 5,000 is that you start looking at stocks that maybe you shouldn't look at. You start scraping the bottom of the barrel because I guess what I would do, I can't tell you what you should do, okay? But I'm going to explain it as if what I was doing, okay? If I had less than 5,000, I would ignore, me personally, again, I would ignore some of the typical advice, which is to diversify and have lots of different positions. Instead, I would look for a really good, really strong position. In other words, instead of having 5, 6 stocks open at a time, I'd only have 1 or 2. And that way, I'm not trying to get 5, 6 bad or low-cost stocks. Instead, I'm getting 1 or 2 good stocks, and then I'm just hoping that I really do my research on those. In fact, the less positions you have, the more research you need to do on those positions. Elena, if you were there, it is already 10 o'clock. Go ahead and give everybody the invite to the Discord channel. This will expire, so you must use it soon. That way, when we show the replay, this Discord invite does not work. You have to attend the live conversation, the live show to get it. Hey, thanks, Frank. I'm glad you learned something. Thank you for subscribing. Even better, share it with your friends. And keep asking these questions, because it's hard for me to know what you don't know or what you want to know or what you need. You know, I've been doing this for a year. I love this strategy a lot. I sometimes take for granted what is still confusing. I forget what it's like to be new. And for those of you that are new, let me just say this. Give yourself time, okay? This stuff, when you're brand new, is super confusing. But if you just immerse yourself in it, if you read books, read articles, and watch YouTube channels, like mine and like others, that are at least talking about the options, then eventually it's like learning a language, and something suddenly, like a switch just flips on, and then you suddenly get it. It literally took me a month, and then my brain just suddenly understood options. And I literally remember the event. I don't know what day it was exactly, but I remember that feeling like I just felt the aha. Like I just suddenly got how options worked and everything like that. Let me look something. Well, let's get that. Elena, go ahead and post that. Elena, are you there? Go ahead and post that Discord invite for all of our live attendees. We need to get that out there to them. They are waiting. I don't know if she's still there and can hear me. Let me find that Discord invite for you guys, okay? Hold on a second. Sorry, this is coming to you late. Here's the Discord invite. Okay? That's as a thank you for staying till the end. You graced me with an hour of your time. I hope you did learn a lot from this, and I hope that we can continue to help each other and grow together, because I want to create like-minded people. I want to know more people that know what I know, trading what I'm trading. We can help find deals together. We can be a part of a team and part of a community. It's one of the reasons I left professional gaming. It wasn't team-based enough in the right way. It's too selfish. This doesn't have to be a selfish endeavor. It doesn't have to be by yourself. You can do this with friends. You can do this with people. Okay? Let's make a team sport out of this and make more money, because trust me, there's enough money to go around. There's so much opportunity out there, but we need help, right? Everybody needs help finding the best stocks, finding the best strategies, figuring out solutions that they might not have figured out. So that's part of the reason why I'm doing this channel and have this Discord group, because I want to surround myself with like-minded people that want to succeed and that want to help other people succeed. If I'm the only one of my friends that's rich, that can be kind of lonely. You can't go on trips with me. I want you guys to come visit Bali sometime and hang out together. I want to surround myself with good people. So thank you for coming. If anybody have any last-second questions, shoot it to me now. If not, keep the questions going in the Discord channel, and I'll make a future video and try and answer some of those questions. Thank you guys so much. If there's no last questions here, I'm going to start signing off here in about 2 minutes. Thank you so much. And did anybody walk away from this more confused than enlightened? Did anybody get more confused about something and need more clarification? I want to make sure you guys understand this as best as possible. And I will try and improve the microphone so we have better sound quality next time. It's been an issue. I think it's a sound card issue. Okay, Wayne says there's no active channel on the Discord. Okay, other people are getting in, Wayne. Other people are getting in. I don't know how to help you on that. You have to have an account on Discord, and you should be able to click the link above. Thank you for thanking me, Taekwondo, and thank you for coming to the show. If you loved it, please share it with your friends. Wayne, let me know if you got into the Discord channel, Wayne. Let me know if it's working for you. I don't know how to help you because other people are getting in. Yeah, Wayne says he uses Discord every day but can't get in. Uh, Find me on Facebook. We probably found the channel through Facebook, right? And let's get this figured out. Yeah, Frank said he had to download it. Sometimes I guess the web version doesn't always work, as well as the download version. Try the different versions. Try the website and try the app. I don't know how to help you, Wayne. I'm sorry. Angel has the same problem. Can't get on Discord. Let me try making another invite just in case that works better. Okay, I tried making another invite. I hope that one works. I mean, it's an active group. People are getting in. I don't know how else to help. I feel bad because I don't know how else to help get in.